Stocks under some pressure after good data this morning, but there's a bit of a fight happening in big tech. Tesla tried to go positive and then got rejected. We're at 390 now. Tom White's here with me in studio, and Garrett Nelson joins us covering some consumer stocks, Tesla included. Garrett's the Vice President, Senior Equity Analyst at CFRA. All right, we got a funny little combination of companies to talk about here this morning, Garrett, because one of the stocks you cover is Constellation Brands, of course, booze, marijuana biz too, down 8%. You also cover Tesla, so we never miss an opportunity to talk Tesla. Hey, is there a theory that maybe if the robo-taxis really start driving us everywhere, we can booze up and not worry about it?
I like that theory.
Maybe these stocks should correlate.
It's certainly a topic we can look at from a research perspective. I think you're onto something there, Oliver. Yeah,
well, I saw someone on New Year's that was complaining about the Uber surge prices. They were like, the most heavy drinking and driving night. It's like, all right, you deserve to get a car home. But I mean, that's kind of the whole robo-taxi theme is make roads safer. And isn't that kind of what's driving Tesla right now?
That's right. I mean, if you look, there's over 35,000 people that are killed on roads in the U.S. every year. So, robo-taxis, autonomous driving is just a matter of when, not if, in our view. And Tesla is really at the forefront. We think they're leading the race to full autonomy. If you look, the recent updates, as something we've highlighted, they're on version 13 now of full self-driving. And what we've seen over the last few updates, as they do these full self-driving updates, really significant improvement in the capabilities of what they're able to do. So, and we know the key to the Tesla story is this autonomous driving. In our view, about a $5 trillion global market opportunity. And we really like how they're positioned. And I think, that's why you saw the stock really take off following the election, and finished the year up 63%. Have seen a little bit of a pullback in recent weeks, but it's clear that one of the priorities of the new administration is getting a new regulatory framework in place to make autonomous vehicles a reality.
How aggressively should investors be buying dips? You've got a pretty juicy price target with the 5 handle on it in Tesla, right? I mean, we're off now $100 from the highs. Is this a pretty clear opportunity then to start positioning for some of these longer term themes?
We do think investors should be looking for opportunities to add, and you've had a pullback. We do see upside to $530 12 months from now. So we would use this weakness as an opportunity. Of course, it's not for the faint of heart. You're going to see volatility, as always, in Tesla shares. But I think the upcoming earnings release could actually surprise, because there were some silver linings in the production and sales report that they put out last week. So I think I'm actually feeling pretty good about the earnings release coming up. And we would be buying at these levels.
All right. Garrett, give me the 60-second take on Constellation Brands, though. It is a stock you cover, and it's getting slammed right now. What's the deal?
So they reported about a 6-cent miss this morning. It was driven by the top line. Their sales revenue came in about $70 million short of consensus. We've just put a report out, and we've lowered our rating to buy. We were at strong buy before on the stock. I think this is a best of breed name in the space. The problem is we just don't really like the space right now, that being consumer staples and the alcohol beverage area. There's a lot of headwinds here. You have a challenging price and volume growth backdrop. You have unfavorable demographic trends with younger buyers just not consuming as much, and also a stronger dollar. U.S. dollar index was up 8% in the fourth quarter. Not as much a headwind for Constellation Brands, but it's something to watch in the consumer staples space, where a lot of the companies are very internationally levered.
Interesting. Fascinating. Best in a bad space, maybe then maybe there's a pairs trade, buy Constellation, sell staples or something like that. Garrett, appreciate the thoughts. Thanks for jumping on with us, as always.
Thank you.
Tom, let's do some trading here.
Yep.
Constellation on the earnings. Let's knock that one out first. Down pretty big, ugly move.
Yep. I think when you look at this one, off over 16%, 17% over the last year, maybe up to 20% now in this pullback that we're seeing. I think the key is when you're looking at trades, maybe for this one, maybe for a potential rebound, give yourself duration on this one because it might take some time to wash out here after this report and the downturn that we're seeing in the shares. So I went out to the April monthly cycle, so about 97 days till expiration, and just looked at buying a call, but then offsetting some costs by selling a call against it, buying a call vertical to the upside, buy the 205 strike call, sell the 225 strike call, so $20 wide bullish call vertical to the upside. You're buying both of them are out of the money, but you're offsetting some of the costs on buying that 205 by selling the 225 because there's still some option premium in there.
You're buying the dip.
Yep, and implied volatility levels have come down. Even though the stock's down pretty significantly, the event risk is over now. So that causes these verticals that you're buying to cost less risk in them. So $20 wide bullish call vertical, you pay roughly about a $7 debit, might be a little bit cheaper than that right now, but if you pay $7, break even 212 to the upside over the next 3 months, that's about 6.5% above the current share price. So you need a move to the upside, but it's not like you're looking for 25% gains in this one. You just need about a 6.5% move to the upside to get above that break even. And the risk-reward setup's pretty good on this one if you're paying $7 for a $20 wide call vertical.
Right. Bad stock on a bad day.
Yeah.
Buying the dip. Tesla, give me the trade real fast here.
A little bit more conservative, but still taking a bullish stance, but taking advantage of the higher implied volatility levels that we're seeing in this name, especially since the start of the year after rallying over 60%. So going out to the January 31st weekly cycle, that's the end of the month, you're going to capture earnings. So implied volatility levels really elevated in the option series. Looking at selling a short put vertical here, sell the 370 strike put. And then against it to make it risk defying because anything can happen by the 350 strike put. So a short $20 wide neutral to bullish put vertical here. You're collecting roughly about a $6.50 credit on this one. So that takes your break even down to 360, 350 over the next 21 days. That's about 7.5% below the current share price in Tesla. So you're playing probabilities on this one. You got a probability of about 65% that break even just under 364 is going. The stock's going to remain above that over the next 3 weeks.
Okay. All right. Let's say bullish trader for both.
Yeah.
Okay. All right. Appreciate it, Tom.
Yep.